Okay, so in a previous video, I did give this Blue Water Vaccines as an example of a stock that I was looking at the pattern for between Monday and Tuesday. And what I had looked at using this Google Sheet I created is that the Tuesday high on average is a lot larger than the Monday close. And so what I want you to do is to take a look at this. See that it's very low. It's dropped very low today. And then I want you to see if it comes up a lot higher later in the day. So far the low was $1.20 was the lowest price it hit today. And if you look at 1 week, you can see that on Friday, which was the 21st, today's Monday the 24th, that Friday the 21st, it closed off at 125. So right now, it is lower, right, much lower, or a bit lower than where it had closed on Friday. And that is what this percentage represents, which is called percent change. This is telling you that right now it is minus 3.2% lower than it was on the previous trading day, which was Friday when it closed. Okay, that's what this means. And in fact, at one point it was even at minus 4% when it was 120. So right now it's still below. And if you might have seen in a previous video I made, which should be linked in this video so you can see this, normally the distance between this close and price on Monday and this high price on Tuesday is fairly large. Right? We see a large average and a large frequency. Now, one thing I don't have here is a target. And we see that the gap is 2% or larger very frequently. So the idea here is that I'm actually, if you're buying it down here, or perhaps even where it is now, 1 cent above the, just a little above the lowest point, imagine if it rises by the end of the day, you've already made money. And that would be today's Monday, right? So at 4, that will be Monday close. And then imagine by Tuesday high, it can get even much higher. So the point is really this diagram that I made. So if today's Monday, and if you're getting it somewhere down here, it doesn't have to be exactly down here. Maybe you're a little bit above it. Imagine it comes up by the end of the day, and then Tuesday, typically this is much higher than this close. Okay, so then you're making all that money from down here all the way up to here, potentially. Okay, when you sell it that high tomorrow on Tuesday. Now, this is all pattern talk. I can't predict the future. I don't actually know what's going to happen. I don't have a crystal ball. But it's an idea that if this is a strong pattern and it looks like it might be moving in that general direction, then this is something that I can take advantage of. All right, and I have actually done it personally a number of times with this particular stock, Blue Water Vaccines, following that it has this typical pattern. So right now it is only 11:59 a.m., 12 o'clock p.m. There's still 4 hours left in the actual market. So let's see what actually happens by 4 o'clock p.m. Now, on the topic of what could happen by 4 o'clock, there is something else that I often like to look at. if this is in fact the lowest point for the day. Well, and there is always a lowest point, of course. I can also do take a look at the typical behavior or pattern between Monday's low and Monday's close. And when I look at it, of course, this is going to be, this is lower. This is the low by definition. So, of course, this frequency is going to be large. But what I'm more interested in is the actual size of the gap. And what I can see week after week, these are all Mondays, that the low price on Monday is a lot lower than the close. All right, so that means it closes a lot higher typically than the low. And that is it. I'm going to come back and see where this is at 4 o'clock. Make sure you get a copy of this sheet if you don't already have a copy, which is going to help you do some of this interesting analysis with day of the week price variation. This is Mr. Mark. Look forward to seeing you around on the channel.